What if I told you $100 could change your financial future? Most people think you need thousands of dollars to start investing. They wait for the right time, but that time never comes. Meanwhile, those who start small, just $100, $50, or even less, end up building serious wealth over time. So the question isn't how much you have right now. The real question is, will you start or will you keep waiting? Because by the time you finish this video, you'll know exactly where to invest your first $100, how to grow it, and how to avoid the biggest beginner mistakes. Let's break it down. Why investing $100 today is more powerful than you think. Here's something they don't teach in school. Time is more powerful than money. Most people wait until they make more money before they start investing. But the truth? Investing early is 10x more important than investing big. Let's say two people invest. 1. Person A starts at 20 years old with just $100 a month. 2. Person B waits until they're 40 but invests $500 a month. By retirement, person A has more money, even though they invested way less. Why? Because of compound interest. When you invest, your money makes money, and that money makes even more money. It's a snowball effect, but only if you start early. And the best part? You don't need to be an expert. You just need to know where to put your money. So now you know why starting early is more powerful than investing big. But here's the next big question. Where should you actually invest your first $100? Most beginners get stuck here. They worry about choosing the wrong investment. They get overwhelmed by too many options, and they end up doing nothing. But today I'm going to break it down step by step. Because investing doesn't have to be complicated. In fact, with just $100, you can start growing your money today, even if you know nothing about stocks. Let's dive in. Option 1. Index funds, the best investment for beginners. If you want a low-risk, long-term strategy, this is where to start. Index funds let you invest in hundreds of companies at once. Instead of picking individual stocks, you buy a fund that tracks the entire market. The most popular? The S&P 500 Index Fund. Historically, the S&P 500 has returned around 8–10% per year on average. That means if you invest $100 today, in 20 years, it could be worth $500, $600 or more without you doing anything. It's simple, safe, and proven to build wealth over time. And the best part? You don't need thousands to start. With platforms like Vanguard, Fidelity, or even apps like Robinhood and M1 Finance, you can start investing in index funds with just $100. Option 2. Dividend stocks. Making your money work for you. Dividend stocks are companies that pay you just for holding their shares. Every few months, you get a cash payment, whether the stock goes up or down. Some of the best-known dividend stocks? 1. Coca-Cola. 2. Johnson & Johnson. 3. Procter & Gamble. These companies have been paying dividends for decades, even through market crashes. If you reinvest those dividends, your money grows even faster. This is a great option if you want passive income while your investments grow. Option 3. ETFs, a mix of both worlds. Exchange-traded funds, ETFs, are like mini portfolios you can buy with one click. They combine stocks, bonds, and other assets into a single investment. If you're not sure whether to choose index funds or dividend stocks, ETFs give you a mix of both. Some great beginner-friendly ETFs include 1. VTI, Total Stock Market ETF, invests in the entire U.S. stock market. 2. SCHD, Dividend Growth ETF, focuses on high-quality dividend stocks. With $100, you can buy fractional shares of these ETFs and start building wealth immediately. But what about crypto? A lot of people ask, should I invest $100 in crypto? Here's the truth. Cryptocurrency is high risk, high reward. Yes, Bitcoin and Ethereum have seen massive growth, but they're also extremely volatile. If you're just starting out, it's smarter to put most of your money into safer investments like index funds and ETFs. Once you have a solid foundation, then you can consider adding some crypto to your portfolio. What's the best choice for you? Here's the simple way to decide. 1. If you want low risk and steady growth, index funds or ETFs. 2. If you want passive income, dividend stocks. 3. If you're okay with higher risk, a small percentage in crypto. The key is just getting started, because the longer you wait, the harder it becomes to catch up. But here's the thing, choosing where to invest is only half the equation. The real question is, how do you avoid beginner mistakes that could wipe out your gains? So now you know where to invest your first $100. But here's the thing, making money in the stock market isn't just about picking the right investments. It's also about avoiding the biggest mistakes that cause most beginners to lose money. Because the truth is, many people start investing with good intentions but end up making decisions that set them back years. And I don't want that to happen to you. So in this final part, we're breaking down the most common investing mistakes beginners make and how to avoid them. If you get this right, your $100 investment won't just grow. It could become the foundation of long-term wealth. Let's dive in. Mistake hash 1. Trying to get rich quick. One of the biggest mistakes beginners make? Chasing fast money. They hear about a stock that could 10x or a crypto token about to explode, and instead of investing in solid, proven assets, they go all in on hype. What happens next? Most of these hot investments crash and beginners lose everything. The solution? Think long-term. The best investors don't chase quick gains. They build wealth slowly and consistently. Even if your investments grow just 8–10% per year, that compounds into massive gains over time. Patience is the real secret to building wealth. Mistake hash 2. Panic selling. When the market drops, the stock market goes up and down, it's completely normal. But most beginners freak out when they see a dip. They see their investments down 5%, 10%, even 20%, and they panic sell. Then a few months later, the market recovers and they miss out on the gains. This is called selling low and buying high, the fastest way to lose money. Instead, smart investors stay calm, because history proves that every market crash has eventually recovered. So if you see your investments drop, do nothing. Stay invested. Keep buying more, because the people who hold through downturns end up making the most money in the long run. Mistake hash 3. Not diversifying your investments. Beginners often put all their money into just one stock, one ETF, or one asset. That's risky because if that one investment crashes, you lose everything. The solution? Diversification. Instead of just buying one stock, invest in an index fund or ETF. Instead of holding only stocks, consider some dividend stocks or real estate investments over time. And once you're more experienced, you can even add alternative assets like crypto or commodities. Spreading your money across multiple investments reduces risk. So if one goes down, others can balance it out. This is how the world's richest investors protect their wealth. Mistake hash 4. Thinking you need a lot of money to start. One of the biggest reasons people don't invest. They think they need more money. They say, I'll start when I have $10,000. But the best investors start small and stay consistent. If you invest just $100 per month into an index fund, after 30 years, you could have hundreds of thousands of dollars. Not by taking big risks, not by getting lucky, just by starting and staying consistent. Because the real secret to investing success? Time in the market is more important than timing the market. The best investment you can make, the stock market, is powerful. But the best investment you can ever make? Investing in yourself. Keep learning. Keep improving your financial knowledge. Keep building your future. Because the people who win in investing aren't the ones who start with the most money. They're the ones who start early and never stop. So now the real question is, will you take action today? Because the sooner you start, the bigger your wealth will grow. Like and subscribe for more financial tips, investment strategies, and wealth-building insights. What's your biggest investing fear? Let's discuss in the comments.